Let's get straight into what's happening with oil right now, because we are a week on from the OPEC meeting where they did decide to cut production by 1.2 million barrels from January. Did OPEC go far enough in your view?
I think they went far enough for the time being, but I think they're going to have to readdress this issue sometime next year. But I'm glad they're meeting for their sake in April, and it may be by April they're going to have to confront another cut.
By how much?
Well, the issue is not necessarily by how much, but the problem is what is the end game that they're into, because they're confronting a much weaker market than they've seen in the past 2 years when they've drawn down inventories. Demand is really problematical going forward, and they're now confronting the result of the higher prices that they've orchestrated, namely this incredible rebound in U.S. production, which is just overwhelming their efforts to deprive the world of inventory.
Absolutely, and it's interesting because what we have is this tug of war, right, between OPEC and shale. It does seem that even if OPEC did move to bring prices up to that 70 USD benchmark, they would still have shale production to contend with, right?
Right, and $70 is a high enough price to get what we've gotten, namely U.S. production growth now of 2 million barrels a day year on year. They need a lower price that they don't want in order to tame U.S. production growth.
So should investors out there be questioning the relevance and the control that OPEC has over the market today? Because it all comes back to these three players, right? Russia, Saudi Arabia, and the US.
Absolutely. I like to call them the struggle of the bear, the camel, and the eagle. And that, I think, has got it right. Saudi Arabia discovered that OPEC doesn't have the clout it used to have. They have 35 million barrels a day rounded of capacity. They had that same capacity in 1980. In 1980, world oil demand was in the 60 million barrel a day range. Now it's in the 100 million barrel a day range. So, yeah, by definition, they lost market clout. They tried to enlist the support of Russia. They've done that pretty well. The alignment between the two is kind of an overlapping alignment. The Russians certainly like a significantly lower price than the Saudis like, but they've got to deal with the eagle. The American eagle is just soaring, and nobody would have predicted, we didn't predict it, even though we were pretty robust in our view of U.S. growth. But what they have to confront is solidly 1 million barrels a day, year in and year out of U.S. production, and that means by 2025, the U.S. is going to be a solid net exporter, and if we're a member of OPEC, it would be way up there among the largest.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.